Hello there, and welcome to the look ahead for Friday, the 15th of March, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, there are a couple of things to be looking forward to tomorrow. Firstly, we'll be hearing from EC President Christine Lagarde. Her comments will be watched closely for further clues over the timing and the scale of ECB interest rate cuts this year. Last week at the ECB meeting, Christine Lagarde suggested that a rate cut will be coming in June, and we've had several ECB policymakers support those views. So I think further confirmation of a rate cut in June could be what the market will be looking for. Now, we've also got tomorrow the University of Michigan sentiment data. On the US front, we've got also US New York Empire State Manufacturing. Now, that's expected to cool quite significantly to -7, down from around -2. And that's just highlighting the weakness that we're seeing globally in manufacturing sectors, but the US isn't avoiding that. And then finally, there's the Baker Hughes rig count as well. So let's just have a look at what all this means for the market. Now, here we're looking at the euro US dollar. As I said, the ECB have really cemented or signaled that June is the date when we could expect to see the first rate cut. Did in fact see a rather dovish commentary from the Greek head of the central bank in Greece, who suggested that 2 rate cuts should be coming by the summer. But I think that's a rather extreme view and not the common view within the ECB. But as we can see, the euro is struggling here, and that's partly or mainly because of the strength in the US dollar that we're seeing today on the back of that stickier than expected PPI inflation data, which has come from stickier after, persistently sticky CPI inflation data earlier in the week. So that's raising questions about the Federal Reserve being able to cut rates in June. And so we're sort of seeing that differential in interest rate expectations play out in the euro US dollar. Euro is falling. It's currently testing this 109 level. If we do get some further dovish comments or any dovish comments from ECB President Christine Lagarde, then I think we could see this price fall below that 109 level. That'll expose the 108.40, which is the 200 SMA. On the upside, buyers are going to need to get above the 109.80. That was the March high. That will bring into focus the 110 key psychological level. The other thing to mention, actually, this is the US dollar Japanese yen. Now, we talked about yen US data that's expected tomorrow. Obviously, again, we're sort of getting this picture from the US that inflation is proving to be a little bit too sticky. It's raising questions about whether the Federal Reserve will be able to cut rates 3 times this year, as they have predicted, or as their medium dot plot showed that they were looking to do back in December. Now we've got the Federal Reserve interest rate decision coming up. I think one of them, they're not expected to move on interest rates, but the key focus is going to be the dot plot and how many rate cuts the Fed is now looking at for the rest of this year, because there is a possibility that that could be reduced to 2, which would bring some US dollar strength. The other thing to be watching for tomorrow is we've got the Japanese wage negotiations going on. It's called the Shunto, and they're sort of coming to a conclusion. And so far, we've seen sort of a couple of negotiations go through with big companies already, and they've agreed to a large wage increases with their unions. Now, what this does mean is if we do get a large wage increases confirmed, then, and so far they're looking like the largest in about 3 decades, it was reported. So then that could offer support to the view that the Bank of Japan will move away from negative interest rates sooner rather than later, possibly as soon as next week. That could lend some strength to the Japanese yen. So here we're looking at the US dollar Japanese yen. Currently it rebounded off that falling trend line resistance dating back to the end support dating back to the end of last year. It's just testing that 100 SMA. It's managed to move above there at the moment. That's at the 147.65 level. Buyers are going to be looking to extend that rally towards the 148.80, which is the January high. As far as what sellers are going to be watching for, if we face sort of, we can't maintain that move over the 100 SMA, then we're going to be looking for a move lower towards 146.60. That was the weekly low, the March low, and also then 146.30, which is the 200 SMA. Just finally, let's have a quick look here at the oil prices. As I said, we've got Baker Hughes rig count tomorrow, and that's basically gives further information about the supply in the US. Oil prices have been really grinding higher over the past few months, in fact, since the end of last year. Recently, just had the move higher. They've pushed above that $80 the barrel level today, and that's following the release of the IEA report. If we do get, for example, tomorrow, signs of more supply or in the US, then we might see the $80 the barrel come under pressure. But right now, the IEA have, in their monthly oil market report, upwardly revised the demand outlook and also reined in the supply outlook, lowered the supply outlook. So that's giving the oil prices a boost. As I said, $80 the barrel, that's what it's pushed above. It's going to be looking towards that 83.50 level now, which is the August 2023 high. And if we get a move lower, if the price does move below that level, then we're going to see the 200 SMA come into focus around the $78 the barrel level. So I hope you've liked what you've seen, and if you have, then please do give this video a like, and if you would like to receive more videos like this, then please do subscribe.